Here is an overview of fund accounting, specifically as related to schools. This information is taken from the PASBO Manual of Accounting and Financial Reporting for Pennsylvania local education agencies. Because schools are not really ownership entities and they don't really have owner's equity, there's a different way of looking at things. As we've discussed before, a lot of times it's terminology, but we need to make sure that they're emphasized and that financial environment shows itself to be a little bit different. So governmental agencies are financed in a variety of ways that differ from the private sector, and so they kind of have a different focus. Most governmental services are financed through taxes and intergovernmental revenues. If you think about a school district, they get their money from the state and from the local taxes. So taxes are used to finance government services when there's been a public policy decision that individual citizens should not be asked to pay for a given service based upon the given use of that service. In other words, schools are free. Public schools tend to be free. So we tend to have fund accounting so everything can be characterized and maintained in its separate fund. Specifically, fund accounting was developed as a governmental accounting standard to respond to a demand for greater financial accountability on the part of the state and local government, so individuals become responsible for their particular fund, and it doesn't get lost in the world of all of the monies that come in for all the different agencies. GAAP requires governments to provide basic financial statements that include government-wide and fund financial statements. We've been talking about the similarities so far. We're just going to make sure everybody really understands the different types of funds. There's 3 categories of funds used in governmental accounting. There's a number of different fund types within these categories. But basically, governmental funds are the funds for which most of these organizations are financed. The focus is for reporting the sources, the uses, and the balances, whatever's left for those financial resources. Expendable assets are used to pay for the current liabilities. The difference between the assets and liabilities is going to be the fund balance. Think of this as a mini financial statement, a mini trial balance, if you will. The financial statements required for governmental funds are a balance sheet and a statement of revenues, expenditures, and statement and fund balances. Again, think of that as a long, expanded accounting equation or a broader set of financial statements. Funds generally fall into 3 categories. The governmental funds, which covers almost everything. Fiduciary funds, which are assets that are going to be held by a governmental unit in a trustee or agent capacity. And when I list a few out, hopefully that'll help explain it to you a little bit better. The same thing with proprietary funds. They're internal service or enterprise funds. But we keep them separate because of where the fund comes from, where the monies come from, and what the reporting needs to be, as well as the expenses are pretty much restricted to certain items allowable within those funds. The general fund is the main fund, and it's used to account for and report all financial resources unless there's a legal or other reason to use something else. It's kind of the catch-all. If it doesn't belong in one of the other funds because of a contract or legal responsibility, then it goes into the general fund. The Capital Projects Fund, it accounts for and reports for financial resources that are restricted, committed, or assigned to expenditures for capital outlays. The types of expenditures from this fund are the acquisition of capital facilities and other capital assets. Think of it as fields and equipment, things that we're going to depreciate in a longer term. Debt service funds are funds used to account for and report for financial resources that are restricted, committed, or assigned to expenditures for principal and interest. This fund should be used to accumulate the resources to make future debt service funds. So we need to make sure that there's enough money set aside to pay the debt. We're going to put it in that fund. And as we pay the debt, we're going to put it in that fund. A permanent fund should be used to account for and report for resources that are restricted to the extent that you're only allowed to use the earnings. This happens with a lot of things. You can only use the earnings and not the principal. That allows the principal to keep generating more revenue for the future. This may be used to benefit the reporting government. Types of governmental funds are listed here. A school food service fund is a special revenue fund used to account for and report the transactions of the school district. Think of the breakfast, lunch, and milk programs. The special aid fund is a special revenue fund used to account for and report special projects or programs that are supported in whole or in part by federal funds or state-funded grants. So if you think about a grant as a contribution of cash or other assets that are going to be used for a specific purpose or activity, the funding is restricted for certain expenses, so it needs to be kept separate. The miscellaneous special revenue fund is a special revenue fund used to account for and report those revenues that are restricted or commuted to expenditures for specific purposes. The Public Library Fund is a special revenue fund used to account for and report transactions of a library that's established and supported in whole or in part by real property taxes. Now, these are just some governmental funds. The idea is to keep the number of funds at a minimum in order to report information. You don't want to overwhelm people with the fund for every little thing, and that defeats the whole purpose of the general fund. So if things are restricted, they go in the specific fund. Otherwise, they're going to go in the general fund. Fiduciary funds are agency or private purpose funds, and they should be used to report assets that are held in trustee or agency capacity for others, and therefore cannot be used to support the government's own programs. A good example is pension funds or trust funds, investment trust funds, private purpose trust funds, and other agency funds. Since I mentioned trust funds, I just want to throw out that trust funds is only appropriate when resources are legally restricted. Proprietary funds have two categories. A proprietary fund focuses on the business type activities to determine operating income, changes in net position, or cash flows. Required financial statements for proprietary funds are basically the statement of net position, statement of revenues, expenses, and changes in funds. Again, your basic financial statements. They come in two categories. The internal service funds may be used to report any activity that provides goods or services to other funds, departments, or agencies of the primary government and its component units. Think of it like the printing capability. It provides a service to other departments. The enterprise fund may be used to report any activity for which a fee is charged to external users for goods or services. These funds are used to report on operations that are financed and operated in a manner similar to private businesses. Some schools have evening classes for adults on non-traditional educational needs. There might be a painting class, there might be a gym class, a yoga class, etc. The funds coming in there are used to pay for those operations. In addition to all the funds that are mentioned, there's other supplemental schedules that are there. They're required to be there because they describe what's happening and how the events are being recorded. The two here are basically non-current assets and liabilities. These are longer-term things, so they're expected to be around for more than a year, but they're not really part of the other part of the government, so that way the school needs to take some sort of ownership in how things are being reported and used. And finally, I want to end where we began, and that is the information that you're covering in the chapter relates directly to what's happening in a school. The terminology is the things that differ. In a corporation, we would debit utility expense and credit cash when it's paid. For a school, we're just going to call it expenditures utility. Again, it's still going to be a debit and credit cash when it's paid. So when you look at the financial statements, you should be able to really understand exactly what's there, if it's for a corporation or for a school district. Let me know if you have any questions.